Hello YouTube, today I'm going to talk about how to choose a dividend ETF. We have two strong candidates, one is the Schwab US Dividend ETF with the ticker SCHD, and the other is the Vanguard High Dividend Index Fund with the ticker VYM. Additionally, we're going to compare these two ETFs with the SPY 500 ETF to see how they have performed over the past 10 years. I am choosing these two ETFs because of their high yields, which are over 3%, and their low expense ratios, making them excellent dividend ETF candidates. Let's look at these ETFs separately. First, let's examine the Schwab US Dividend ETF. Over the past 10 years, it has gone from $32 or $33 to $71 as of last Friday, which is more than double. As mentioned before, the expense ratio is very low, and the dividend yield is high at 3.6%. The price-to-earnings ratio, P/E, stands at 13.5%. When we look at its holdings, we see a focus on industrials, healthcare, consumer defense, and financial services. Some of its holdings include PepsiCo, Coca-Cola, Merck, Verizon, Chevron, Home Depot, and Pfizer. Overall, it looks quite promising. Now let's turn our attention to the Vanguard High Dividend Yield ETF. Over the past 10 years, it has gone from $57 or $56 to $104, nearly doubling in value. The P/E ratio is 14.25% and the yearly dividend is 3.09%. The expense ratio is only 0.06%. Its holdings are primarily in consumer defense, financial services, and healthcare. Some of its holdings include ExxonMobil, Johnson & Johnson, JP Morgan, Procter & Gamble, Chevron, Home Depot, Merck, Coca-Cola, and Pepsi. The holdings seem quite similar to the Schwab ETF. For comparison, let's now look at SPY. Over the past 10 years, SPY has gone from around 159 or 160 to 427, more than doubling in value. However, the dividend yield is low at only 1.5% and the P/E ratio is high at 21. Its holdings are heavily skewed towards technology, followed by healthcare and financial services. Major holdings include Apple, Microsoft, Amazon, Nvidia, Google, and others. So, how do we choose the best dividend ETF going forward? Let's calculate their total return, which is the sum of the stock return and the total dividend payout over the past 10 years. Please look at the Excel sheet. The first ETF is the Schwab Dividend ETF. Its starting price 10 years ago was $33, and now it's $71. The stock's total return is 114%. The Vanguard High Dividend Yield ETF has a stock total return of 81%, while SPY has a stock total return of 162%. From a stock return perspective, SPY is the better choice over the past 10 years. However, let's factor in the dividend payout. The dividend payout for the Schwab ETF is $16, for the Vanguard ETF it is $25, and for SPY it is almost $50. The dividend payout percentages are 48%, 44%, and 31% respectively. Let's calculate the total return. The annualized return for these three ETFs is 10% for the Schwab Dividend, 8.5% for the Vanguard High Dividend Yield ETF, and 11.3% for SPY. Therefore, based on total return, we should choose SPY. However, as risk-averse income-focused investors, we desire less volatility in our returns and are willing to sacrifice some performance for more stable incomes. So let's examine the risk-adjusted returns. Beta measures the volatility of a stock compared to the market or the correlation of the stock market's volatility. The beta for Schwab is 0.8, for Vanguard it is 0.77, and for SPY it is 1. To calculate risk-adjusted returns, we consider the risk-free return, which is the average yield of the 10-year government bond over the past 10 years. The 10-year Treasury rate has ranged from 3% to almost 0.6%. Currently, it's around 3.8%, so we can use an average of 2.25% as the risk-free return for the past 10 years. Now let's calculate the risk-adjusted returns using something called the Traynor ratio. The Traynor ratio is calculated by taking the stock's total return minus the risk-free return and dividing it by the stock's beta. Please refer to the Excel sheet. The annualized risk-adjusted return for the Schwab Dividend ETF is 9.8%. For the Vanguard High Dividend Yield ETF it is 8.5%, and for SPY it is 9.1%. From a risk-adjusted return perspective, the best dividend ETF is the Schwab Dividend ETF. Thank you for watching.